has said that in order to form the government, if required, he may take the support of the BJP to remove the present dispensation, and similarly, he may also seek support from TMC to form the government. But removing Mamata Banerjee is his main priority. He claimed that AIMIM might contest on 15 seats in Bengal, to which Humayun has agreed.
पलासी से यहाँ तक जब आए रोड शो करते हुए, कैसा सपोर्ट लग रहा है?
देखिए, मेरा तो 2 महीना से बाबरी मस्जिद बनाने के लिए ऐलान किया और लीम भी रखा 6 दिसंबर 2025। उसके बाद बहुत सारा विरोध आया, सरकार को तरफ उन्हें नहीं चाहिए। तो कुछ आरएसएस का आदमी, बजरंग पार्टी का आदमी, वो भी मेरा इनको खिलाफ ज्यादा से ज्यादा विरोध किया। लेकिन मैं तो यही सोचा, जो मैं किसी को संवैधानिक विरोध का काम नहीं कर रहा है, कोई कोर्ट का खिलाफ कोई काम नहीं कर रहा है। जो इसके बारे में हाई कोर्ट में 2 बार केस आया, एप्लीकेशन डाला, तो हाई कोर्ट ने ये निर्णय लिया, जो बाबरी मस्जिद बनाने का कोई संविधान का खिलाफ नहीं है।
समर्थन कैसा दिखा?
समर्थन तो ज्यादा से ज्यादा है। कल तो यह जो काम शुरू करने गया, कितना लाखों लोग यहाँ मौजूद था। अब तो सब
Cutting across to my colleague Tapas Sengupta, who's been tracking all the developments on the ground. Tapas, your sense of the statement by Humayun Kabir and how much of it is actually possible?
Well, as far as his political ramifications are concerned, it doesn't seem to be working on ground, because BJP is absolutely against Humayun Kabir and this building of Babri Masjid. But Humayun Kabir has significantly said that he will not be a kingmaker, but he will form a government. But to form a government, if required, he is ready to garner support from the BJP if BJP is willing, because his priority remains to outstretch the present dispensation. But again, he also added that if required to form a government, he needs support from Trinamool Congress. He is also ready to do that. So it's not very clear that what is going to be the political significance of this statement of Humayun Kabir at this juncture. But he has made it clear also that he is in talks with several parties. He did not name other than MIM. He said that he is ready to contest election with the coalition with MIM, and MIM will be contesting almost at 15 seats. And that coalition decision is almost final now. Final word would come from Asauddin Owaisi. But apart from that, he is also in talks with the left. He is also in talks with the ISF. So he is trying to garner support to outstep the present dispensation. And what he made remarks today, speaking to us, stating that if required to outstep the present dispensation in power in West Bengal, he is ready to garner support from the BJP. Now, it remains to be seen how BJP reacts to it. This is for the first time we have made this demand, and whether or not this is feasible, only time will tell that. But BJP is yet to react on this claim of Humayun Kabir.
All right, we await that reaction. We wait and see how the BJP responds to this particular statement. For the moment, many thanks, Tapas, for getting us the latest. Moving on, it's a big boost to India's air power. Ahead of French President Emmanuel Macron's India visit, the government has cleared the Rafale fighter jet deal, sending a strong strategic signal. The Defence Ministry has approved a 3.25 lakh crore rupees proposal to procure 114 Rafale jets for the Indian Air Force. Now, under the plan, 18 aircrafts will arrive in flyaway condition, while 96 jets will be assembled in India, giving a major push to indigenous defense manufacturing. Officials say around 80% of manufacturing will happen domestically, with indigenous content pegged at 50 to 60% under the Make in India program. Meanwhile, IAF Vice Chief Air Marshal Nagesh Kapoor has praised the Rafale jets, calling them the buzzword, and has highlighted their pivotal role in Operation Sindoor, referring to them as hero. The clearance comes at a critical time as the IAF looks to plug fighter squadron gaps and boost combat readiness, even as India deepens defense ties with France ahead of Macron's visit.
Rafale definitely was a hero. Amongst other heroes, during Op Sindoor. There were a lot of other heroes also. Yes, Rafale is the buzzword. आपने वो word इस्तेमाल किया. It is the buzzword. Indian Air Force is looking forward to inducting a lot more MRFA aircraft. Whether that is going to be Rafale or any other, presently under deliberation, and a concrete decision on this has not yet been taken, and so therefore it will not be correct for me to comment at the moment. But yes, Indian Air Force is definitely looking forward to induct a lot more of these newer generation aircraft into our inventory, and the sooner the better.
And coming across to my colleague Shivani Sharma now joining us on the broadcast. Shivani, so far with the way it is going, the way is clear for the Rafale deal to now take off in India.
So, what the sources have disclosed is now that 114 Rafale approval has been approved by the DAC today, which was shared by Defence Minister Rajnath Singh. That means the approval for necessity has already been given. So, this green signal is now moving the discussions for this deal ahead with the more levels like CCS, and then the process will be open for discussion. But certainly Rafale is the buzzword. That's what the Vice Chief of the Air Staff had also mentioned to responding to our question yesterday. And certainly Rafale has been recommended by the Indian Air Force because Indian Air Force is already flying 2 squadrons of Rafale jets. The pilots are trained for it. They have been the heroes of Operation Sindoor. They've proven their capabilities in multiple operations. So certainly the need for new 114 multi-role fighter aircraft is there for the Indian Air Force, and Rafale is moving ahead to fulfill that gap, so that from 29 squadrons the Indian Air Force upscales its squadron strength in the coming years, and this deal will take little time to get finalized, but certainly the ball is rolling now. The way for 114 Rafales is open after the DSC approvals today.
All right, Shivani, many thanks for getting us the latest. With that, we now go across to my colleague Sakshi Batra of Business Today, who joins us with all the updates on how the markets are doing today. Over to you, Sakshi.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-powered by Purvankara, the art of development celebrating 50 years.
Good afternoon and welcome. You are watching Business Today. This is the market closing show. I'm Sakshi Batra and we are here to get you all the market closing action. First up, let's take a look at what's hot in the corporate and the financial world. Market slide despite FIIs buying streak. Sensex tumbles over 450 points near 83,800. The Nifty slips below 25,850 mark. Strong US jobs data, dense rate cut hopes, AI disruption fears and global risk-off sentiment weighing on the Indian equities too. Panic selling hits IT stocks as the Nifty IT index plunges over 5% to a 10-month low now, erasing 1.3 lakh crore rupees in value. The TCS, Infosys, Wipro, HCL Tech kind of stocks fall over 4 to 5% each. This is again on the AI fears. TCS market cap also slips below 10 lakh crores. HCL shares rebound over 3% from intraday lows after Q3 earnings. Revenue have missed the estimates, but profitability has also fallen by 30% in December quarter. Company maintains its focus on volume-led growth, guided margins, and better FY27 outlook. China bans car makers from selling vehicles below cost to curb intense price wars in the world's largest auto market. According to reports, new rules target deep discounts and unfair pricing. Indian auto stocks, including Tata Motors, is in focus on the possible impact. India to roll out new inflation measure shortly. CPI shifts base to year 2024, cutting food weight, raising services and digital spending. January inflation is likely around 3% under the revised series. Straight away looking at how the markets are trading in the last half an hour of trade, 0.6% lower for the Nifty. Now we have hit and also breached the 25,800 mark, viewers. That's also slipping near the day's low point after a lot of choppiness that has really dented sentiments through the course of the day. Most of the sectors have now come under pressure. The Nifty Bank is now also lower, but it's the IT pack that is really taking a beating. 5% lower for the IT index as a whole. Real estate is down by over 1%. Oil and gas down by 1%. Mid and small caps also losing up to 1% in trade, barring metals and financial services. The only two sectors that are still holding into some green, but rest of the sectors have all slipped. On the Nifty, you have Bajaj Finance continuing to soar higher, bucking the trend, 3% up in trade. Shriram Finance also up by 2% in trade right now. Eicher Motors 2% higher, about 2 to 2.5%, 3% kind of moves on these top gainers. You have Trent, ICICI Bank and BEL from the defense space that's also buzzing in action. But what's not doing well? No surprises for guessing, it's the IT pack. Infosys 5.5 to 6% lower. Tech Mahindra, TCS among the top 5 losers on trade. You will find all of them within the IT pack. All the big 5 IT firms are the top losers as far as the Nifty is concerned. Let me quickly welcome our guest on board, Devarsh Vakil, Head of Prime Research, HDFC Securities, is joining in on this program. Hi Devarsh, warm welcome to you. Your sense of the IT stocks beating that we have seen today, is this something to worry about? Of course, there are fresh AI fears. This comes on the back of underperformance over the last entire year for the IT sector, and not too bad earnings of Q3 as well. No negative surprises were seen across the IT numbers that we saw, but still, it's these fresh AI fears that have really taken away all the sheen from this space. How would you look at it?
Hi, thanks for having me. It's a pleasure to be on your show. So, you see, major IT companies have announced mixed results, and as you mentioned, the revenue growth was there, but obviously there were profit was under pressure. One-time labor charges, if we just exclude that also, the margin was under pressure. Now, I think this is a transition period for Indian IT services company. They are passing through a AI-led disruption, and they will have to restructure their business models. So it is time to remain cautious on that. We have been cautious on the IT, and we have asked investors to remain under weight on this. The impact of IT, not only on the IT services, but all across the board, is now being felt, because as more and more new versions of the new softwares are being deployed. In fact, not only in Indian IT companies, the US IT companies, services companies, US financial service companies, all are
right
under the business model is under companies.
So what would you say investors do at this point in time? Should one completely exit IT? If somebody is big on IT, should one just stay on, let this things clear out, or should one reduce exposure, or maybe take the benefit of this dip? What would you advise of all these three options?
So I would say we should wait. We should wait for further dip before jumping in. I don't see very large downside from IT companies, because these companies have started restructuring their business model from now outcome-based businesses and contracts. And mind you, these companies have a lot of cash on the balance sheet. So if there were to be a meaningful downside, I expect these companies, especially after the recent changes in the budget, to announce buyback and support their prices at the lower level. So I'm not very bearish from this prices, though we would wait for further clarity before adding back to our IT exposure.
All right. Well, we'll also shift focus to what's happening as far as the India-US trade deal is concerned. Remember, there was some enthusiasm on the markets also on the back of that, with India securing lower tariffs under the India-US trade deal. The country is definitely set to gain a significant edge over regional peers like Bangladesh. And this is as per SBI research, which is now flagged how this could reshape the textile exports, manufacturing and supply chains going forward. My colleague Aishwarya Patil has also got the full breakdown of what this means for India's trade prospects and the potential winners and losers as well. Aishwarya, first up, of course, there was big news coming in the first week of February itself, when we got to hear that yes, India and US are in the stages of the primary deal. Bringing down the tariffs from 50% to 18% was also good, because it also brought us down to an advantageous role vis-a-vis the other countries. But then came the news that Bangladesh has managed to secure some zero duty access for some of its exports to the US, and thereafter we saw a sharp fall across textile stocks in India. What's the current stance that you do see here?
Well, the India-US trade deal has, of course, been in the midst of a storm, both inside and outside the parliament. But let's look at this SBI report, and I'll tell you some key findings from it. What it says is that the trade surplus after this interim trade deal is sealed between India and the US, it will cross about $90 billion annually. As far as this increase in exports is concerned, it will be driven by the top 15 items. It includes gems and jewelry, leather and leather goods, textile, chemicals, seafood and engineering exports. So these are the top 5, and that will take our exports to about $97 billion or so. It could even go all the way, the surplus could even go all the way up to $100 billion is what this SBI report says, if we include and take into account the other items as well, apart from these 15 products that I just mentioned. The decline in tariffs is a golden opportunity, is what this SBI report is saying, amidst so much criticism and flack that the US-India trade deal has got. As far as imports is concerned, they say there will be a structured rise, because as far as imports into India is concerned, we've of course committed $500 billion for the next 5 years, and also promised some zero or almost negligible or maybe reducing tariffs on certain products that we import from the US. So that's on the import and export part. Now remember, back in FY 25 and 26, our surplus was about $40 billion and $26 billion respectively, and that will rise to about $90 billion or so is what we are gathering from this report as we speak. Now, as far as the US-Bangladesh deal is concerned, and the allegations that we don't have parity as far as competitive landscape is concerned with Bangladesh, what Piyush Goyal, Commerce Minister, has clarified is that this only applies and is related to the yarn and cotton products, if at all we buy or get cotton from the US. So any product that is made from US cotton in terms of textile, that will attract zero tariff. So that's the clarification coming in from Piyush Goyal, and this also applies to Indian textile products as far as the US-India trade deal is concerned. So that's the clarification there.
Thanks a lot, Aishwarya, for getting us all of those details. Devash, coming to you, how do you, find out when it comes to the US-India trade deal, the kind of concerns that we initially had when it came to the Bangladesh exports, also getting a better deal of zero tariffs to some of the products there? Our textile stocks also reacted, but there's a clarification that Piyush Goyal, our Commerce Minister, has given, that it's not pan products, but it is limited to a certain products, and that Bangladesh stands to benefit only when they import certain products, or the cotton that is originally made in the US is when they will have to pay zero hike. How would you really read this with respect to the textile stocks back home?
So the trade deal, the US lowering the reciprocal tariffs, has unlocked the opportunity. See, US imports about 118 billion worth of textile every year, and India, along with the Bangladesh and others, are a significant player. So this reduction in duty is most welcome for the sector, which was really struggling and reeling under the duties. Now, the recent deal with the Bangladesh, as the minister pointed out, it is only when they import the US material, and that clause is also open for Indian players as well. The worry is that the Bangladesh has very low wage, and especially in the apparel sector, and that's where they export about 80% of their production. So yes, it is a worry, but I think Indian players across the years have learned to compete with Bangladesh players. So I don't think that will be a big challenge. The deals which export orders which our players will get through because of this deal will help them revive the business.
Right. Let's also shift focus to the auto space and try and find out how is the industry really looking at the trade deals that are taking place. We are also looking at price hikes return onto the radar when it comes to the auto sector as a whole amidst the rising commodity and currency pressures. And there was a lot of fear that, this price hike could perhaps offset the GST cut benefits for the consumers. But I spoke to Mr. Rajesh Jijurikar. He's the Executive Director and CEO for Auto and Farm sector of M&M on the Q3 results. First up, the results have been strong. The management is happy on that. But clearly, he, in my conversation, did talk about how they have undertaken a 1% surge in prices as far as SUVs is concerned, and how he does believe that both the trade deals with the EU and the US could put new export opportunities for the industry. Let's listen into what he had to say. So when it comes to, the kind of demand that you're seeing on the back of the trade talks that are happening, how are you looking at that? The US trade deal talk is now, been finalized, the interim deal at least. The EU deal has also been finalized. How are you looking at all of that? There was also some anticipation that from the EU there will be a lot more higher end priced vehicles that will be coming in at much lower tariffs now. How would you be looking at all of these scenarios, and is there an overall impact on the sector? And for you, what are the opportunities, if you could highlight, sir?
Yeah, first let's try. I'll focus only on the EU trade deal because the US doesn't seem to have any significant play related to auto. And there's some opening up of the sector for much bigger and more expensive cars. So we're not in that space. So I'm not really covering that at the moment. Let me talk a little about the EU trade FTA. So we think it's firstly, it's an opportunity. And it will enable us to think, especially in categories like electric, where we have cutting edge products, and even others, to get into the EU market, with quotas that are very favorable for the size of opportunity that is there. We don't think that this will significantly affect we actually strongly believe it will not affect us here for the following reason. The quota start at 15,000 euro price point. On 15,000 euro, there is a customs duty of, let's say, 30% plus. And most of the vehicles in Europe are more than 4 meters, so they would pay a GST of 40%. So when you look at all of that, a starting point of 15,000 euro and including the costs incurred in India will lead to a price point of 35 lakhs. Now, 15,000 euro product, the products we have in India are way stronger than the 15,000 euro product that we're talking about. So, our top end of our products are 22 lakh ex showroom. We have very good options even in this 15 to 18 lakh price point. So, we actually don't see this affecting us. And it actually is an opportunity because it gives us an opportunity to get our products out there once we have a stronger left and right portfolio over the next couple of years.
Fantastic. Sir, I also wanted to ask you on the price points as well. There's been a lot of talk about whether the companies are looking at price hikes now. There has been a talk about how GST, the cut that was passed on, will that get offset in case the prices are hiked there across the industry? Some of the companies have already announced it. What's your plan, sir?
We also announced a 1% increase in the SUVs. That was basically, we had no choice because of the commodity increases being quite significant, especially in precious metals and the impact of foreign exchange, both in the dollar rupee rate. So we had to factor in a 1% increase, which we've announced. It does not offset the benefit of the GST because the GST reduction was roughly 8% in UVs and about 10 odd percent in the bigger UVs and about 10 odd percent in the smaller UVs. So it's still a very small percentage of the benefit, and this was necessitated by the very strong increases that we've seen in commodity and the impact of the dollar rate.
Right, Devarsh, coming to you, you heard the management out there from M&M talking about how are they looking at opportunities on the back of the trade deals, as well as the price hikes that they have taken. What's your view on the auto sector and on M&M?
Right. So, export side, I don't think there is much impact, but actually the Indian OEM makers are having a fantastic run on the domestic front. The PV numbers, if you see for the January, they were upward of 12%. I saw PVs also, two-wheeler also growing about 25-30%, and the tractors, the agri side, they have fantastic 45% kind of YY growth in the month of January. So numbers are very strong, and I think this momentum is expected to continue for the next month also, because there are a lot of new launches and the year-end demand will also start kicking in. There is a slight price hike by this OEM, and that may dent the demand a little bit, but I don't think that will be impacting or derailing the overall numbers. So we think that the auto stocks continue to remain strong. There are government scheme where they have actually allocated on the PLI side 5,940 crore for the auto component exports also. So not only the OEM players, we feel that there is an opportunity at the auto components, and there we may see a lot of advanced technology coming in and investments from abroad also coming into India. So I think auto and auto ancillary should continue to remain as a part of your portfolio.
Okay. Shifting focus to the aviation space now. India's top airlines, Indigo and Air India, now are urging the government to ease new cabin crew fatigue rules. According to Reuters sources, these changes could disrupt the schedules and also affect the growth. Joining me now with all the details is my colleague Richa Sharma. Hi Richa, good afternoon to you. We've been hearing and seeing a lot of changes with that respect. We just are, the memory of Indigo crisis is very much fresh in our memory as well. That took place in December and all of January as well. Slowly and gradually, Indigo is now coming back onto the radar. FTDL rules are now being followed as well. But why this fresh again urging the government on easing of the rules as far as the cabin crew rules are concerned, the fatigue rules are concerned? What's really happening there?
Yes, actually, thank you. And as you mentioned, it was just February 10th when the extension was lifted, and we are again back hearing about the same norms. In fact, these are part of the same rules which came out, draft rules which came out in October, where the for the crew also, for the cabin crew also. So the DGCA directed, reducing the time period depending upon the landing. So what we see in India, we have, frequent landing, because maximum duration in aircraft is 3 hours. Yeah. But for a shorter flights, you see if it's Delhi, Lucknow, it's a very small, short duration flight. So what the new rules do is they decide the cabin crew work timings also based on the landings. So if they, achieve a maximum number of landings, then they have to give in a rest. While the airlines want that it should be decided on the flight duty period, like the number of hours they give during the flight. Okay. So one of the main causes is, and these draft rules for the cabin crew are already being challenged in the court. They have already reached the court, and court is hearing the matter, because it was said that this benefits primarily the airlines on the long haul durations, for the international flights. So they are already being challenged. And secondly, what we also know as part of these rules is one of the things is sharing of hotels by the cabin crew. So as of now, it's a twin sharing basis where the cabin crews are given. The new rules say that for the better rest, it should be a single occupancy. So airlines have been saying that this will add to their cost if each cabin crew is provided a single room. So this is also one of the issue they have been flagging. And now there is a thing going on. The airlines are now saying, primarily the three major airlines, Indigo, Air India and SpiceJet, they have written to the DGC in January saying that they want relaxation, otherwise it will also disrupt their schedule, because cabin crew availability will become a challenge like the pilots. What we saw.
Okay. Thank you so much, Richa, for sharing all these updates. Keep an eye out on all the developments there and keep us up to speed on what's the next as far as these aviation companies are concerned. Devash, have you been looking at Indigo after the stock had taken a massive beating in December, slowly and gradually again taking off in Jan? How is it placed right now, and what is your expectation going forward amidst all these regulatory changes?
Right. So right now we don't have a coverage on the aviation, especially stocks, but this is a sector where at lower levels every investor must look at it. Despite the recent turmoil, I think as our disposable income grows and as the infrastructure on airports and new flights, new aircrafts will come in, this will become even more affordable for Indians. And I think the overall growth is going to be fantastic. So at lower level, we will again relook at these stocks. Once these regulatory concerns and all these issues are over, I think it will be again a good time to relook at this sector.
Right. Devash, apart from the sectors that we've discussed today, what is it that's coming onto your radar afresh? We've had some of the massive news flows now behind us. The budget is behind, the US-India trade deal is behind, EU trade deal is also behind us as well. So, and the earnings are largely over for Q3. What is it that the markets should look out for as key triggers, and what is it that you're watching out for in the markets as opportunities?
Right. So, on aggregate side, on aggregate Nifty, I think we had a tepid year, 2026. I think we are looking at a 2027, FI27 as a year where earnings will make a comeback. On the Nifty aggregate side, we are looking at around 1280 to 1300 kind of a EPS number for Nifty. That means about 15 to 17% growth on the top of 26. And we are now more or less trading around 19 times forward earnings. So valuation have become attractive, and this is a time where many of the mid cap and small caps have already corrected a lot, and we need to find good opportunities in that. Over the next 3 months, if we accumulate good stocks with decent management and a good earnings growth, I think there is money to be made in the market. The sectors where we are looking or fishing for opportunities, obviously the banking and finance, the BFSI space, especially on the NBFC side, I think there are good opportunities there. We continue to like the auto and the telecom space, which we were anyway overweight. Defense stocks have corrected, and I think there is opportunity there. We should relook at defense stocks. And government has done a lot of capex. The capex has been driven by government, but I think this year we may see a rebound and relook at the private capex also. So engineering, infrastructure, consumption, all these themes are likely to make a good comeback. So investors actually spoiled for choice this year.
Okay, investors will be spoiled for choice. We've been waiting for such kind of an opportunity to really come in, Devash, and you're definitely showing us the light there. You did also point out that you believe the mid and the small caps could have a brighter space to look at now. They have underperformed the large caps in the last year. Finally, if you're seeing light at the end of the tunnel as far as the mid and small caps are concerned, many investors invest via mutual funds when it comes to their positions in mid caps and small caps, and that's also a preferred way for retail investors, because mid and small caps have higher risk than the large caps, so it's better to go via the fund manager's route. How would you really look at the opportunities within the mid and small caps? Should one double down their SIPs in mid and small caps?
I think so. See, discipline, over the years we have seen that the investors who actually made good money stick to basic rules. Basic rules are that you keep reviewing your asset allocation. When there is one asset class which becomes a larger part of portfolio, you trim exposure there, and that would be, I think, exposure towards the bullion now. We have been recommending 10 to 15% allocation there. Maybe you can bring it back to 10 to 15% and allocate that money towards the mid cap and small cap mutual funds. Obviously, we don't do any research on there, but there are plenty of information available out there to look at good mutual fund with a good track record, and you can allocate certain capital towards it. I think if you do SIP and if you stick to asset allocation, next year should be good for investors.
Okay, let's quickly wrap up the markets and come back to you, Devash, with all our viewers' questions. We have shut shop viewers below 25,800 mark. There's a sharp drop of about 156 odd points on the Nifty. So we have seen a down day, a clearly choppy day, and that's ended into the red as far as the Nifty is concerned, down by about 0.6%. You can clearly see the chart on your screens. The Nifty Bank also has slipped lower in trade. The broader markets, mid and small caps, have also dropped lower in the trade today. Look at the Nifty Bank, better off than the Nifty, but still about below the flat line, and a lot of choppiness through the course of the session today. We've also looked at the IT stocks. That's where the pain point emerged right from the morning trade today. It's ended at the day's low point. You can clearly see 5.5% lower. Of course, there have been a lot of reasons behind this. There's been the jobs data that has come in. There are fresh AI fears that have come in as well that have dented the sentiments on the IT pack. 0.5% loss for the mid-cap space, and the small caps have also come under pressure. Most of the sectors have ended lower, barring just about financial services and metals, the only spaces that have managed to pull up. But as Devash also pointed that he is looking at the NBFC space as an attractive opportunity. Perhaps this is a safer space that you should be also looking at. On the Nifty, the top gainers despite this weakness on the index remained Bajaj Finance. You also had Shriram Finance up and about in trade. Then Eicher Motors up by about 2.5%, so 3% higher. You also had BEL and Trent among the gainers, but on the declining side, Tech Mahindra, the top laggard as far as the IT stocks are concerned today, 6% lower on the Nifty. Infosys down by 5.8%, TCS down by 5.5%. We've also seen TCS market cap drop down below the 10 lakh crore rupees mark as well. Wipro, HCL Tech, all five of the top five losers are from the IT pack, along with M&M. That's dropped by 2.2%. This is despite strong earnings coming in line with the estimates that we've actually seen. And brokerage houses also raising their target prices. M&M has still slipped in trade right after. But coming to your questions now, Devash, we have the first question from our viewer Suman from Delhi. She wants to know about IT stocks again. She says IT stocks are down, so should I buy this dip or will the fall continue for some more time?
The majority of the large part of the fall may be already in the prices, but I see there is still, it is going to be lackluster unless we see some new triggers. I don't see any reason to increase allocation towards IT sector now. Maybe around 5 to 10% lower. There should be some relook at the stocks, but I would wait for clarity to emerge before committing new capital to IT stocks as of now.
All right. Thanks a lot, Devash, for being with us and for answering those questions of our viewers, as well as giving us an insight on the markets. Viewers, it's a wrap on the Business Today show. In case you too have any questions about your own investments in mutual funds, your SIPs, stocks related, or even gold related queries, then please do send them to us on the number that's flashing on your screens. We'll be happy to address all these questions with our top guests who join us on the program. Don't forget to tune in at 9 a.m. tomorrow morning with Abha Pakaya to catch all the morning opening action as far as the markets are concerned. Stay tuned.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From overnight global cues to live Dalal Street moves, we decode what matters